Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us is Scott Nations, president of Nations Indexes, to review yearly performance in the Nasdaq-100 and the divergence that we've seen relative to other indexes. Scott, it's great to see you as always. And this is such an interesting yearly comparison that we do, because while many of the same constituents might be in the Nasdaq-100 and the S&P 500, as an example, the divergence of performance was pretty stark this year.
It absolutely was. It wasn't a good year for any asset class. Certainly not for crypto, not for equities, not even for fixed income. But you're right. The difference between the S&P 500 and the Nasdaq 100, particularly profound. So the Nasdaq 100 is down 33% from its recent 52-week high just after or just before the first of the year, versus the S&P, which is down 21% from its 52-week high. And the question becomes, as you pointed out, many of the names in the Nasdaq 100 are in the 500. Why the divergence? Well, it's largely because the Nasdaq 100 is made up of the most interesting names in the world. They're some of the highest flyers, so they've done really well in the last few years. They're coming back to earth a little bit, and that's the case with the biggest names. So Meta, what some of us still call Facebook, 67% below its recent 52-week high. And Tesla, we've all heard about the woes of Tesla, 62% below its recent 52-week high. And Jill, you know, the Nasdaq 100 cap-weighted index, like most reasonable indexes are, and those are two of the bigger names. And so when they have that tough a year, it's going to drag the entire Nasdaq 100 down.
Right. And to your point, when we saw that strong growth over the past decade and a half, that's when you see the outperformance. So I guess once the environment starts to normalize a bit here and the focus is off of value, more back on growth, you also have the opportunity for some nice returns if you have a longer term mindset. But let's talk a little bit more near term here, because Nasdaq-100 Volatility Index futures, VOLQ, excuse me, they're set to expire soon.
Right. The Nasdaq-100 Volatility Index futures, which trade at the Chicago Mercantile Exchange, as you pointed out, under the ticker symbol VLQ. The December contract will expire on Wednesday in 2 days. And so right now, the January 2023 contract becomes what traders like myself call the front month. And, you know, if you're worried about the rest of the year, if you're worried about this trend in the Nasdaq 100 continuing through the rest of the year, then two good ways to hedge some of that would be to either buy those Nasdaq 100 volatility futures, again, the January contract, or you can buy call options in the options. Those VOLQ options trade on the Nasdaq options exchanges. And if you buy calls or call spreads, that's another good way to hedge some downside exposure.
And Scott, I know your expertise is in the derivative space, but I want to get your thoughts on macro here as we go into 2023 and what to expect longer term. Do you think in the new year, perhaps we wean off of macro a bit and start to focus on fundamentals? What's your overall outlook?
Well, that's really interesting. Right after the first of the year, the first couple of weeks after the first of the year, we're going to start getting Q4 earnings. And that's going to be really important, particularly for some of these names we've already mentioned that have had a really tough stretch. I do think that interest rates, so kind of the macro issues, are going to continue to be important. You know, there's this really goofy thing where we now expect the terminal rate for the Fed funds future, or for the Fed funds rate, the terminal rate next year, we expect that to be above 5%, but the 10-year yield right now is just about 3.5%. And the only way that works is if there's some sort of really unfortunate slowdown. I think that the 10-year yield has to catch up, and that's gonna weigh on stocks. Whenever interest rates are headed higher, that makes it tough for stocks. So let's look at both of those things in January. Earnings, and we're going to get earnings from just about everybody who matters in January, and interest rates.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.